Good afternoon, Chart Spartans. I've got a very important video for you today. It's about my missus, Silver, why I love her, and why I'm going almost all in. I say almost all in because I still hold some investments in Tesla, in crypto, some commodities and Tilray, and I don't want this channel to be about clickbait. But I've been investing in silver since 2016. I first started flirting with some ETFs, and then I moved on to the harder stuff, the physical. In 2017 I started buying the miners, and I haven't looked back since. I now think it's the time to really get serious with silver for myself. This isn't financial advice. And I'm actually going to start selling some of my other investments and putting them into silver to increase my exposure, probably to about 80% of my investable assets. This is a silver bar I bought recently off someone on Facebook. It's a Wall Street Mint bar, and it's just beautiful to look and hold. And you can really see how, throughout the ages, people have loved this and they've used it as money. It's such a primal attraction when you hold a bar of silver. So why do I love silver? Well, silver is a very special metal. It's got a dual purpose as both a monetary and an industrial metal. As a monetary metal, I made a video recently about the case for gold and why I think gold goes significantly higher over the next 10 years. And all of those reasons apply to silver as a monetary metal. The three reasons I touched upon were the dollar bear cycle, which I see playing out to 2024. You've got negative real yields and potentially falling even further. And that makes zero yielding assets like gold and silver relatively more attractive. And you've got the continuously expanding money supply and federal balance sheets, which doesn't show any signs of stopping anytime soon. But if I wanted to talk about monetary metals, I could just talk about gold, and I've already done that. The special thing about silver is it's also an industrial metal, or as Keith Neumeyer of First Majestic Silver likes to say, a strategic metal. And what he means by a strategic metal is silver is pivotal for industries and societies to do all the things that they want to do. And if we want to progress as a civilization, if we want to fight climate change, and if we want to boost our national defence, it's silver that we need. And the reason that we need silver is because silver's got a set of very unique properties which other elements on the periodic table don't have quite as much. And the main properties that silver has is, firstly, its superconductivity. It is the best conductor of electricity on the periodic table, and its conductivity is quite evident. If you're ever holding a bit of silver in the cold or in the hot, it's gonna get cold or it's gonna get hot more than anything else that's around you. But it's that superconductivity of silver that makes it great in electrical connections, in circuit boards. It's why the tech industry needs a lot of silver. It's also why, Teslas, they're going to need a lot of silver. And certainly with solar panels as well, you need silver for its superconductivity. Its other properties, silver's got disinfectant properties. Throughout the ages, silver's been used in medicine and fighting diseases and illnesses. I think in the bubonic plague in Europe, in probably what was it, the 1600s, silver was used to hold liquids and foods to try and keep the infections off the food. It's also been used in medicine as with like the scalpels and the medical instruments. And then more recently, it's been made into silver particles have been made into a paste to treat infections and diseases. And so that's why there's a lot of demand coming through from biocides. And the other property silver's got is its photosensitivity. So in the 70s, it was used in photographic films because of its light sensitivity. Obviously, that's not going to be as much in demand anymore. But there's a lot of demand coming through for silver. And you only have to open the news to see all of the agendas and the initiatives that governments around the world are trying to push forward. You've got the Green New Deal, where they want the whole of society to become renewable and carbon free. And then you've got the Internet of Things, where every object in your house is going to be connected by a microchip and electricity and the internet. And you've got the electrification of society. All of these things are going to need silver. So to fight climate change, for technical development and for national defence, silver is essential. I think on the national defence point, US cruise missile guidance systems, one missile guidance system alone would use 13 kilograms of silver. A Tesla, this isn't an actual statistic, but this is more of an estimate. Tesla would use 2 ounces of silver per car. And in a solar panel, in like a regular style solar panel, there's 2/3 of an ounce of silver in each panel. So if you was going to cover a roof in solar panels, you could quite easily be using 13 ounces of silver. And you just think, all the houses that they want to cover in solar panels, all the cars they want to replace with electric vehicles, battery storage, it just screams silver. I think by 2040, they're predicting that 49% of silver demand is going to come through electric vehicles. And maybe that hasn't factored in the demand from solar panels yet, because solar panels haven't really got going yet. They're kind of like a pie in the sky idea, whereas electric vehicles have really come to fruition in the past couple of years. But I reckon over the next few years, solar panels are really going to come to fruition. So there's a lot of demand that's going to be coming through for silver, and that's going to play out over the next 10 years. In front of me, I have my favourite chart in the whole chart universe. It's the 40-year cup and handle pattern in silver. What's a cup and handle? A cup and handle is, you see here where you've got 2 peaks that makes a sort of cup structure, and then the price comes down here, it corrects down. This is called the handle. And you can imagine holding this part and drinking from this part. I love this chart so much, I actually got it printed on a mug. So if you can see that there, it might not be very clear, but that is the silver cup and handle on a cup with a handle. Genius. So I can enjoy my morning beverage whilst appreciating how historically cheap silver is. If anyone's interested in one of these mugs, then get in contact with me. But this is the 40-year cup and handle formation in silver. And naturally, this chart pattern alone is bullish. But what makes this pattern incredibly, ridiculously bullish is the time period that it's formed over. This is 40 years. And as the saying goes, the bigger the base, the higher in space. Any normal cup and handle pattern is very bullish. But a 40-year cup and handle pattern on an explosive asset like silver, well, the sky's the limit, really. You can see here, this is like a little cup and handle pattern we had in 1974 to 1979. So you've got a peak, you've got the cup, you come back to another peak, you've probably got a little handle here that's not quite clear on this chart, it's not quite defined. But what was the result of that? The result was like a 600% gain from the cup line. Imagine if we had that situation today. How would that look? I mean, it's probably going to be off the charts, but let's just have a look. Yeah, it's off the charts. But that's targeting $300 silver. And Keith Neumeyer is famously predicted for a long time, even when no one else was talking about silver. He said triple-digit silver. As people have got more excited, you're getting calls for $300 silver, and just looking at that chart, $300 silver looks incredibly possible. Other people have even said $1,000 silver, and if you imagine a $10,000 gold price per ounce and a 10 to 1 gold to silver ratio, $1,000 silver is not outside the realms of possibility. I mean, anything can happen, but just the fact is, silver under 30 is ridiculously cheap. And what this chart doesn't account for is inflation. We all know over the past 20 years that inflation has been absolutely rampant, shown up in all assets, houses, stocks. Hasn't really showed up in consumer goods until now, really. But if this chart factored in inflation, if it was inflation adjusted, the price of silver would look a lot cheaper now relative to its 1980 peak. And I can show you that on this chart up here. So this is macro trends. This is that same chart we were looking at, the non-inflation adjusted price of silver. And it's the same chart. I mean, the price here at this point actually reached 50, but that was probably on a daily or a weekly intraday time frame, and therefore it's not captured on this particular chart. But essentially this is the cup and this is the handle as per the other chart. Now watch what happens when we make it inflation adjusted. Relatively, it makes silver a lot cheaper compared to where it was in 1980. And if you imagine like a little chart line across here, we're close to breaking out on inflation adjusted terms. Maybe if silver gets to 35, it will break out of this 40-year downtrend. So really, silver can get to 120 and it still hasn't broken out from its 1980 prices, inflation adjusted. Once it gets above 120, that's probably when the bull market actually starts. And who knows what happens from there? It could double, triple, whatever. Who knows where inflation is going to go? But just on the fact that there's so much renewable demand for silver, and there's so much technological, like microchips and electrical connection demand, that alone is going to push silver really high over the next 10 years. So let's get back to the charts. And the next chart I want to show you is the gold to silver ratio. And this is let me clear this for a second. This is an important chart for measuring the relative value of gold to silver. How many ounces of silver it takes to buy an ounce of gold. Now let's zoom out on this. So currently it takes 68 ounces of silver to buy 1 ounce of gold. That is quite a high ratio, and we can look through history. The highest it's been really is 100, and it's taken 100 ounces of silver to buy 1 ounce of gold 3 times in recent history. By recent history, I mean the past 90 years. Back in March of 2020, the ratio actually reached 120 ounces of silver to buy 1 ounce of gold, and at that point, I was just chucking everything at silver. I don't think we're ever going to see 120 silver again. I'm not even sure we'll see 100 gold silver ratio again. I think what tends to happen is you go to these extremes, and in the natural cycles of these assets and the rotations of them, you go to one extreme and then you come back to the opposite extreme. So you go from silver being massively undervalued to silver being fairly valued relative to gold. Silver being massively undervalued, silver being fairly valued. And then we've probably just completed a cycle of silver being excessively undervalued. It's never been that undervalued ever in history, as far as I'm aware. And what you can imagine seeing is, let's get this. So you go from these peaks and you come down to these troughs. You go to these peaks and you come down to these troughs. You go down to these peaks and you come down to these troughs. I mean, it would be natural to expect the gold to silver ratio to come down to about 30, as a very conservative estimate. And what that would represent is a doubling of the outperformance of silver versus gold. Now, I'm already very bullish on gold. I think gold goes a lot higher over the next 10 years. So I'm extremely bullish on silver based on the gold-silver ratio. And I think that for this reason, I don't really buy much gold. I buy the gold miners, but predominantly I stick to silver, the silver miners, the silver-related investments. But to give you a bit of historical context, this is the past 90 years. And the past 90 years is not representative of how gold and silver have traded throughout the ages and throughout the whole of human history. So in ancient Egypt, I think when it was under Menes in 3000 BC, the gold to silver ratio was 2.5 ounces of silver to buy 1 ounce of gold. And then you've had in ancient Syria, you've had a 10-to-1 ratio. You've had in the Roman Empire, you've had a 12-to-1 gold to silver ratio. And then I think in medieval England, probably when was that, the 1500s, you had a 11-to-1 gold to silver ratio. And then more recently, the US Government Coinage Act in 1792 under George Washington, they set a 15-to-1 gold to silver ratio. So you can really see that throughout the last 3,000 years, the gold to silver ratio has generally traded around 10-to-1. It's probably gone up to 20-to-1, but really it's stayed in that quite confined range. And it's only been the last 90 years that it's really got out of whack like this. And then if you manage to get in back in March of 2020, that's probably the trade of the century. But the reason I think it has got so out of whack is because central banks have stopped buying silver. I mean, silver is a monetary metal, but central banks haven't been buying it. They've been buying gold, despite the fact that they want to tell you that gold is a barbarous relic and it's got no value in the financial system. But, they've been buying gold, but they haven't necessarily been buying silver. And I think one of the possibilities, I don't know this for certain, but one of the possibilities is if inflation gets so serious, which I think it will, and potentially we go down the hyperinflation route and central banks are scrambling to buy hard assets to shore up their reserves, they're scrambling to buy gold, I think they might return to silver. And if that's the case, well, that 30-to-1 ratio, that could easily become a 10-to-1 ratio, or I went negative there. That could easily become a 10-to-1 ratio, 20-to-1 ratio. I mean, if we got to a 10-to-1 ratio, that would be a 6 times outperformance of silver versus gold, and gold's going to be performing well. So that's a very good performance. But then also, if you factor in all of this electric vehicles and solar demand and the Internet of Things, I think silver could easily break below this 33 to 1 ratio. This 33 to 1 ratio was set in 2011, and we didn't have all this renewable drive. We didn't have the Green New Deal. So I think getting down to 33 to 1 or 30 to 1, that's a banker. Getting further, I think that's highly likely. And that really is why I absolutely love silver. But why I love silver to the point where I'm going to start selling my other investments, some tech stocks, some, anything, just to increase my silver exposure, I'll show you on this chart. So this is, let me sort the chart out so it's nice and clear. This is silver divided by the Nasdaq. Nasdaq is like the tech stocks in America. When silver divided by the Nasdaq is falling, that means that the tech stocks are outperforming. When it's rising, that means silver is outperforming. And this chart basically goes back to 1985. So if you remember on the first chart, silver peaked in 1980. We're pretty much starting from the peak in silver. So what you can see here is that over the last 40 years, tech stocks have massively outperformed silver. We can see that by this, big decline in the ratio. And where we are now, we're almost as cheap. Silver is almost as cheap as it's ever been relative to the tech stocks. I think we're 50%, more expensive than the cheapest silver's ever been. We're basically at the bottom though. And they always say to you that what was a good investment in the past is not necessarily a good investment in the future. Past performance is not a guide to future returns. And what's happened in the past, You've had the tech stocks massively outperform everything else for the last 10 years, except crypto. You know, you've had your Apples, your Amazons, your Teslas, your Microsofts, the real tech darlings of the last 10 years that have really been screaming. Are they going to be the best investments for the next 10 years? I highly doubt it. What's been happening, we've had limited growth around the world for the last 10 years, and all of the excess capital and all the excess currency that's been printed by central banks has searched for a store of value, and it's chased yield, and it's chased growth stocks, and that's what's pushed the tech stocks really high. But where we are now, we have tech stocks that their prices are really high, their yields are really low, and the future expected returns are actually quite low now. And then in terms of yields, we're in a negative yielding environment. So in this environment, it makes gold and silver relatively more attractive. So now that the future expected returns on the tech stocks has dropped because the prices have gone up so much, this money or currency that's been printed and is flushing through the economy is now going to search for a new store of value. And from a risk-reward perspective, I think the safest place is precious metals. And then when you look at the chart like this and you see how historically undervalued silver is relative to the tech stocks, I mean, that's where money's going to be chasing. It's certainly where my money's going to be chasing, and I expect it's where institutional money is going to start chasing over the coming years. They say buy low, sell high. If you're buying low, that's silver. If you're selling high, that's your tech stocks. And for that reason, I'm going to be rotating into silver. It's not just the silver, the physical silver, but the silver mining companies. They have a lot more upside. But yeah, I think this looks incredibly bullish. If I let me change the settings on here. I get you onto. So potentially I can expect to see this over the next 10 years. If you imagine the chart, this is like a big bowl pattern that's in formation, and it looks like we're starting to break higher here. So probably what I would expect is the mirror of this, and we will come up to there. So that's probably that's at least a 6 times outperformance. At least I can't see what the real figure is down here. It could be even more, but it's at least a 6 times outperformance of silver versus the tech stocks. Now that's not necessarily saying the tech stocks are going to crash. I'm not necessarily saying that. You could have the tech stocks flatline, and if we're in an inflationary environment, it probably will be likely that the tech stocks won't crash because inflation, their dollar price is going up. So even if they flatline, in an inflationary environment, they're falling in real terms. But even if they flatline, that means that silver would absolutely explode. If the tech stocks do crash, silver, maybe it flatlines, or maybe it crashes, but to a lesser extent. But essentially, the picture is no matter what the tech stocks do, I don't really have a view on the tech stocks, but no matter what they do, silver is going to outperform because of how cheap it is compared to the tech stocks now. Now, this maybe it doesn't play out this year. Maybe it bumbles along. The tech stocks go higher and silver goes higher at the same rate, and the ratio stays constant. But eventually, it's only a matter of time. You can't keep these relative values suppressed over a prolonged period of time. And you saw on the cup and handle chart of silver that I expect silver to explode. And I think that will correspond with a massive outperformance of silver relative to the tech stocks. So that's why I love silver, why I'm going all in, and I hope you found some use out of this video. Don't forget to like and subscribe. Ta-ta, pip pip, bye-bye.